It's here. And while the thought of candy is sweet and comforting, investors are getting comfortable with the current market environment as well. Brendan McCarty, back from column E to break down everything for us. How are you, Brendan?
Boo, I'm great.
I think that's what Jets fans are screaming at yesterday after losing the Pats for the umpteenth time in a row. And listen, that's why you've got that big grin on your face. Great.
One day win doesn't make a season. We need a lot more of them, and we're not winning anyway.
Listen, last week, everyone, we had some incredible number of viewers responding to us how great it was that we focused on earnings. As you can see the list here from Earnings Whispers for this week, there's another big list of earnings all coming out this week. So we poured over these and we've pulled out some amazing names to dig a little deeper in and help you and with your investment decisions this week. Let's start with today. XPO Logistics has already reported pre-market. And I had a friend of mine in Australia who recently sold his trucking business to DHL. So when I saw the chart of XPO, I was a little surprised. But when you factor in gas prices and labor difficulties, maybe I shouldn't have been. Its RXO brokerage business spins off on Tuesday, and they had flagged missing expectations. But after last week, Brendan, and like the numbers, like they've beaten on the EPS front this morning here. What do you think we could see in this name going ahead?
So it's interesting. They flagged the pre-announcement 2 weeks ago when they were announcing the RXO spinoff. I think it's RXO.
Yeah, correct. RXO. Yeah.
It's funny. We've talked about a million companies, and this one, I kind of dumbfounded me a little bit because I didn't know they have they're basically spinning off their Uber business for trucking, and they did the pre-announcement, I assume, to hide the fact that things were weaker. Then this morning, the LTL business came out much stronger, and the unit that they're spinning off was much weaker. So it was kind of predictable, and I guess in hindsight, it was all predictable. They followed this approach. LTL. I mean, we've seen the shipping charts. Everybody's seen the shipping charts. I remember there's always the stories. I remember we started talking in the very beginning about bikes, right? I was trying to buy a bike for my son, and shipping containers had gone up 5 times. Well, ever since those spikes in 20 and 21, shipping has come way down. And XPO is in this LTL business, which means I just forgot the name of it. Basically, a ship with less than a full truck. And it's a very profitable, I believe it's profitable because it's a little higher margins, and they expect to maintain these high margins out to the next 5 years. But my question is, if freight costs are coming down, wages are going up, gasoline prices are still high, I don't know, that tells me margins are going to come in and freight costs are still coming down. They mentioned on the call 2 weeks ago, or pre-announcement 2 weeks ago, that freight costs were still 20% higher than 2019. So if we're unwinding the pandemic, why can't we unwind another 20% in freight costs in the process? And maybe it's embedded inflation, maybe it's sticky inflation, who knows? That's a Fed question. But I would just say that XPO is spinning off its brokerage business kind of, I don't know. I would just say that they're a little too optimistic, I think, on their outlook. I think that things just aren't that great. I know they beat today and the stock will probably do okay. It hasn't really moved much in pre-market. But this is all about the outlook. This is about going forward. This is about those 2 units and how they do. And I'm just not thinking, I think the LTL business is going to weaken further. I think they're just a little too optimistic. They're saying like 6 to 9% growth a year. I don't know. That just seems a little much to me. I'm not even in the trucking business to say that, but it's just they're going off numbers that still seem inflated.
You remember back in the day, I just had like a little bit of a memory flash up in my head. I think there was a reality TV show about how truck drivers would bid on like taking different pieces of, like, let's say you're taking a horse cart or a bunch of horses, and they bid on it, and whoever like had the lowest bid obviously would get it, and they'd rush there and all sorts of side of it. I know this is very different to what their spin-off is, but
yeah.
But I'm sure it's probably a similar sort of thing. It's just a little more fine-tuned. But listen, that's not my area of expertise, and I don't think it's yours either.
No, not at all. I know the Antique Roadshow, and I know how they buy units and all that sort of stuff. But I wouldn't even. And maybe they use LTL to ship it all. But I have no. This. It's just an interesting business to hear about it. I just thought they were a little optimistic. Who knows?
Okay, well, let's move on to BP, and they report Tuesday pre-market. Brendan, I don't get this one. All companies have been smashing it this year, and we have one of the biggest oil and gas miners in the world today, only up 13% year to date. Could this be one that's under the radar, or am I missing something here?
Their problem is they have that huge write-off from Russia. It's like 24 billion. I don't know how you write off 24 billion without like having a major impact on your balance sheet, but they did it. They're also making this big push into renewables and trying to get out of the bread and butter of oil and gas. And guess what? If you're not getting out of the oil and gas business right now, your stock is skyrocketing. Even weak players like ExxonMobil, who has for years been dragging, the stock's exploding right now. It's like, I think it's over near 110, if I'm not mistaken. BP, on the other hand, has been dragging because they have this shift into renewables in a time where people are sort of pushing back against renewables. Renewables aren't that much cheaper than fossil fuels. So you're making a very futuristic push. So I think it's 2020, another long-term push. XPO is the same thing. Long-term view here, like 2027, 29, where solar and wind is going to be the place to be. Well, you know what? In the meantime, you're giving up like $88 per barrel in oil. Now they're having issues with distillate production apparently in Europe, whereas here, if you're in a distillate market and you're doing well, you're making lots of money because the heating oil and distillate spreads have stayed really high, even in the winter, and we still haven't even had a cold freeze yet. BP is having trouble because Europe is just not before. They're having trouble over there because the energy markets are what they are. They also purchased, another interesting thing about the stock is they had a buyback going of about, I think it's $4 billion a year, and they just bought a biogas company. I have no idea what a biogas company is. It sounds like environmentally free gas. That's all I get out of that. But it equals the cost of the buyback. So essentially, they may have just taken the buyback off the table to buy a unit that's probably not going to be profitable like for years to come. I mean, there's just such a big pushback against ESG right now that they're just they're shifting probably at the wrong time. I guess a couple of years from now, the chart may look, all right, they made the right push, but they didn't exactly sell high here. They sold low, like they sold before prices were rising. So that's why the stock's a drag. I mean, it looks like it wants to break out right now. I think it's over 33. But I mean, again, say they come out and say, we're not buying back stock. Well, you know what? Who's going to want, you'd rather be in this, you'd want to be in Chevron and Exxon, which are exploding. And if BP only pays out a certain amount of money in dividends, it's based on a 60% of something number, which I've lost. It's like 60% of net revenue they pay out in dividends. Well, A, they just bought a biogas company, so that's not happening. And B, the buyback's going to be suspended or impacted. So that's what's hurting the stock. They have to have, I mean, oil and gas is weaker than last quarter. European markets are hard, but I still think they make some money this quarter. But the market just doesn't believe much. Now, I think if it does come in, like say they come in their outlook and they match or slightly beat, the stock's going to break out of this range. It looks like it wants to. Investors are waiting for it. If they disappoint, though, they just go back down. It'll stay in the range. So they're just making the transition at the wrong time. And that's what's impacting the stock most.
Yeah, back to talking about the chart side of it, it does really look like it's trying to break out. So, and everyone loves watching the chart break out.
Needs some momentum.
All right. Also, Tuesday pre-market reporting is Lear Corp. They beat estimates back in August, but its share price is below that level now. BorgWarner beat estimates last week, and O'Reilly had a big move as well after their earnings. Considering Lear is down 18% year to date, is this a good name to look at going into these earnings reports, Brendan?
So this is an old phrase that we used to use. Those who have money can continue to spend, and those who don't have money don't buy. So nice chairs and electronics are not being spent on by those who don't have money. Those who are in the EV markets, well, these things come steady with their car. You know, it's just another piece of $100,000 car. Lear's in that business, and their chairs have. I mean, it's chairs and electronics. I had to research Lear too. You hit me with a bunch this week that I'm not super into. But it's the stock itself has been slowly improving because, you know, they're weathering the storm. I mean, they have people that buy EVs or buying Lear gear. The one thing that got me about this, though, is Ford said in their earnings last week that cars are selling below MSRP. Well, if things start selling below MSRP, that's a margin impact, and that's going to filter right down the pipeline. You're going to start seeing, if things are trading below MSRP and you don't have to buy the fancy chairs, well, your car gets even cheaper. And I think that might impact Lear. I think Lear is down 18%. I think the S&P is down more, though, if I'm not mistaken. So I think it's outperformed the S&P a little bit. It's just, they're in a I keep writing. I wrote fancy chairs all over the place. There's some pictures of some of these futuristic gaming chairs sitting in cars. My son would be proud. He would love this sort of thing. But I would just say Lear, it's banking on trucks. That's their big business. EV trucks. That's what they're trying to bank on. They're hoping that's going to be good for them. But trucks in general only do well when the prices are lower in the energy world. And right now, gasoline is rising. I mean, gasoline surprisingly coming higher at this time of year. I actually paid $4 a gallon yesterday. I couldn't believe it. And that's a negative for Lear. And it can also actually, if you look at the chart, it lines up perfectly with the reduction in cash in the system. People have less money to spend on cars to some extent because cars cost more from an interest rate perspective. So I think Lear's outlook might be very interesting. Their outlook's going to be key. If they are negative, they say anything like Ford did with the MSRP, that might impact the stock. The chart going into the report looks investors are optimistic, though. I just think Ford is an issue there, and that's something to be heated, I guess. If Ford said MSRPs are lower, that could be a future impact across margins, which means people are buying less shares and expect less expensive stuff inside the car in general.
Okay, and then Wednesday pre-market, we move on to Paramount. And streamers are having a good run since Netflix reported. So maybe it's a good time to be looking at Paramount. Their stock has nearly halved over the last 12 months. Are investors forgetting about them in the streaming wars or just not considering them as a factor, Brendan?
Based on what I've been reading over the past few months, I don't think the shorts have been forgetting about them. This stock's chart is awful. I mean, I like Paramount for its soccer coverage. I think Paramount, the Champions League stuff, it's a great interface. You pay nothing for it. I mean, well, $5 or whatever it is a month, $10. But what's interesting about Paramount is, and I think Dougie Cass was short this for a long time, and I had never looked into it. But basically, they're stuck between the cord and the stream, and they have the cord's being cut. We all know about that. We talked about that. So the advertising revenue on that side is falling. Xfinity, I think, reported a massive dilution in subs last week. They said that numbers fell dramatically on their cable. But on the stream side, they're not making any money. So not only they're being squeezed in the middle, they don't really have a lot of hit movies. I mean, Top Gun was Top Gun, and it was a big bottom line addition to the company. And Pluto TV apparently has been doing well for them, but their advertising and that has slowed down, which is ominous for those getting into the advertising business. If Pluto TV, which I think is free, yes. If you see an ad if they're seeing an ad slowdown, what's to say? Like we are, the two of us argued over Netflix a couple of weeks ago. Well, if Pluto doesn't have Netflix's content, so, but it is an ominous thing for anybody in advertising, like Peacock, big in advertising, and Peacock's trying to make that transition from cord to streaming. Xfinity sees it within their own business, so they're already getting out of the way. Now, the thing with Paramount is they make a lot of products. They create a lot of, like, their content is geared to the older groups of people. And if older people, like, if those are the people that have the money, so if those people are all cutting back on streaming, whereas the younger people are staying with Netflix and going into the new shows, like, this is basically The Equalizer versus Stranger Things, right? The Equalizer is a hot show on CBS, but it's not made for my kids. I mean, I don't think my kids even care about The Equalizer. They care about Stranger Things. And this is Paramount is the older crew that's looking at their streaming costs and say, wait a minute, we're spending too much across the board. Maybe we don't want Paramount because they don't really have a lot of content outside of football and soccer. And that's pretty powerful in itself. I mean, I don't think they have the World Cup actually at all. They just have Champions League. So long story short, I think that they're just being squeezed, and I think that's why the stock continues to move lower. Now, if I was to be a skeptic here and I was overly short this thing, the stock is underperforming. The stock is underperforming the S&P. It has terrible breadth. It is extremely oversold and is being forgotten by everybody else. One piece of optimistic news, I may not want to be short the name anymore because it looks ripe for a short squeeze. I mean, it's fallen from 100 down to 20 in a business like Netflix hasn't been carved down by 80%. So it's vastly underperforming competitors. Yes, I know Paramount's a big Star Trek thing. I am a Trekkie. I love Star Trek stuff. But I think the shows themselves, I don't think there's anything new on Star Trek. I mean, there are certain things on it. I'm not a big fan of some of the new content, but long story short, if they come out with anything that's positive, that might get the shorts running and that might get the stock running, but they're being squeezed. And Bloomberg says it's a 2-year recovery. Well, you know what? 2 years in streaming is a really big deal. Like 2 years from now, we may be looking at streaming through 3D. Who knows what? I mean, it's a growing business and it's going fast. I mean, it's moving forward, it's progressing. And I don't think they can wait 2 years to get profitable. That's just me.
Yeah, listen, you can see some like consolidation in the space, maybe, or just like closing down some of the streaming services potentially. As the World Cup is on Fox, I believe. They've been doing a campaign.
That's right. It's Fox. Right.
But yeah,
Peacock has, Spanish side through Univision. That's right.
Yeah, they're doing the whole Santa approach to it. And it's like the holiday season, the World Cup and so forth, which I think starts in a few weeks.
Yeah.
So listen, it'll be fun to watch going into Christmas. Lots of sport. And we'll get into more sport in a second. But in between, we're getting Thursday pre-market is Barrick Gold. And when I traded the gold names back in the day, it was always a head scratcher to me as to how investors look to gold names as a safe haven. Well, investors are starting to think the same as I did back then, back in the day. So with their Barrick Gold is down 20% year to date. There are so many factors in gold stocks like life left in the gold mine, but there are more factors now for them, like the cost of labor and the dearth of skilled workers available. Brendan, what do you do with Barrick Gold right now?
So it's interesting. They're called Barrick Gold, but they have a copper, big in copper.
Yes.
And they're trading right with copper prices. I ran the chart up against. I've been trading these markets forever, and these metal stocks never have a rhyme or reason to them. Their earnings never matter. It's all based on the price of the product, and even then, they don't always follow the price of the product. They have like gold itself. The gold and the Bitcoin crews always fight each other, like what's better safe haven. And these days, it's what can fall faster, right? What doesn't fall faster, and the gold people are actually winning on that one, I guess. But right now, Barrick is following the price of copper, and it's almost to a T this year. Copper is actually stabilizing. Now, I can't figure out the earnings in this thing. I looked at it three different ways to Sunday, and it's just none of it makes any sense to me. I can't figure. I know they deal in Canada and it's different currency wins and that sort of thing. But so goes copper, so goes Barrick Gold. I think that might be the case right now. Copper is stabilizing though overnight. I think there was another China announcement that's hurting copper again. I mean, the title says the ticker symbol's gold. It's called Barrick Gold, but I think copper is the driving piece of it. So I would just say they're all looking copper is what's going to be interesting. If they say copper prices are higher, that could argue that demand globally is picking up after, the Fed central banks driving it all down for the past year. So I would just say the key is copper. Watch their outlook on copper going forward and the way copper trades, because that's the way Barrick's trading. I've never really seen a stock as a proxy to copper. I mean, it was Freeport, McMoran, copper, and gold back in the day. I think they got rid of the copper and the gold part, but and they used to trade right with copper, but I'm probably just not tied into this circle as much as I used to be in terms of these names. But watch the price of the outlook for copper with this name, and that might be the driving force for it going forward. I mean, the outlook is just not the best. Right now, gold's in a bear market. Copper's been falling for almost, I don't know, a year and a half, a year and more. That means margins are shrinking. They won't have a great outlook. But again, does the outlook matter? I mean, I'm sorry. Does the financials matter? It's all about the outlook product. I mean,
well, it's more so. It's more usually it's more like how is like any new potential mines. That's usually the things that drive that make these things pop and exceed expectations. But once like you, I haven't touched this space for a long time now, and I'm very happy that I haven't had to.
Well, I remember the XAU is like, everybody used to swear by the XAU, and I'd be like, but it doesn't follow the price of gold. I don't know if there's a proxy for Bitcoin companies out there, strictly Bitcoin companies that trade Bitcoin. I don't know if that would be an interesting chart. Do they follow Bitcoin trade for trade? I have no idea. I mean, it's a commodity company. You deal with the effects of a commodity company, and the more volatile the commodities are, the worse the stock does. It creates more uncertainty. And you got bear markets in the metals, and that's probably not going to help the company. So it's not the greatest sector to be in right now.
Yeah. All right. So we touched on sports there before, and the last one we're doing an in-depth look on is DraftKings, and they report Friday pre-market. It is a great season for bookmakers right now. The NBA, NHL, NFL, and Major League Baseball all happening in the US at the same time. Not to mention the upcoming Soccer World Cup, which we touched on there before. The T20 Cricket World Cup is currently going on in Australia, and Australia did win this morning, beating Ireland, so I'm happy about that too. But DraftKings has been a big disappointment, down 68% year to date. This window can help the window of like sports everywhere can help to raise guidance, but we're going to have to see from these numbers. Brendan, I think this sector is ripe for some consolidation, and any first mover will see the whole sector rip up. But let me know what you think about the stock going into these earnings.
So I listen. So I'm a big fan of OETV, and I can't listen to CNBC in the background anymore. So I turned on local sports radio because we are sports nuts in this town. Even though the teams aren't doing as well as they did a few years ago. Well, my Bruins are 7-1 or 8-1. But aside from that, I hear Kevin Hart speaking about DraftKings every 20 minutes on that channel. I mean, I can bet the underdog for the overdog odds. I can't get that ad out of my head because I like Kevin Hart. I think the guy's funny. I've always thought he had a great sense of humor, but my God, it's like every 20 minutes they have a promotion for DraftKings, and then they go on to baseball with the other sports guy for what was that investor during the pandemic? Barstool Sports. The sports guy for Barstool Sports, the baseball guy, he's on there saying bet baseball. So betting in sports is big, and the funny thing, and a lot of it has to do with Massachusetts finally adopting sports betting. It took forever. The people on the sports channels ripped the governors, ripped the spawn for not sponsoring it enough. Well, we finally have it, and we're getting promoted out the wazoo. I mean, honestly, God, I like Kevin Hart and all that, but I don't want to hear his voice anymore. I'm starting to hear it in my sleep. I mean, he's literally on all the time. But basically, DraftKings, the reason why it's been going down is because they're trying to open up across the country, get in other states. Also, I mean, it's a very competitive business. I don't know why the bigger players aren't in it, like an MGM, like I know Caesars is big in the sports betting, but like, I don't know. I'm not even sure.
MGM's in it. They got who's the guy who played? He's an actor as well. I can't think of his name off the top of my head.
So they're big.
They've got their MGM sports book as well, and there's ads in that side of it too.
I think DraftKings. Go ahead. Sorry.
I was just saying, I think it just depends on where you are in the country on what ads you're seeing.
You're right about that. Like DraftKings has first mover because they had fantasy, so it got a whole generation of fantasy sports players moving into, spending on gambling. I mean, I did my DraftKings, and I think it's like the daily fantasy thing is huge these days. Now I looked at the chart for DraftKings trying to figure out if there's some sort of seasonality with it. We're actually entering the period where we have all the big major sports. Baseball, I don't consider major anymore because it's a dying sport. But I mean, it's popularity. They may be getting big fees, but they're not. Their popularity's falling. But when the NBA, NHL, and the NFL are all running at the same time, DraftKings stock, aside from last year, has done well. Now that's 2 out of 3 years. Stock hasn't been public for that long. I mean, last fall wasn't the best either because they were dealing with a lot of regulatory stuff. But I would just say that are they have first mover in a younger generation of investors, if you will, if you want to call these gamblers investors, because gambling has become investing of sorts. It's a business that has radio shows. It's a business that has lots of sports shows. You have guys moving over from the investment world into this business. So DraftKings is the upstart trying to get through with that in FanDuel. Yes, consolidation should be big. I mean, you get some really big players like the Wins, and they have these massive and amazing sports books. Like MGM was just, I haven't been to Vegas in a long time, but when I went into the MGM sports book and you had like thousands of TVs just to stare at and look at any TV you wanted and watch it during the NCAA tournament, greatest thing in the world. But DraftKings is coming through the online medium and they're promoting the crap out of their product. That is the one drawback, and that's what's been hurting the stock. They're spending so much on promotion that people like, when are you going to start making some money here? I think ultimately it's first mover and getting in front of this younger generation that it's like Robinhood, right? Robinhood tried to get the younger generation investing with them forever, but they eventually dropped the ball. DraftKings is doing the same thing, and the stock, the chart, if you lined up Robinhood next to it, you might get the same similar chart. So I would just say this is like a cannabis company in a way, trying to get approval across the country, break down walls, break down barriers, and at the same time grow their base. And they're using a lot of promotions to do it. That's what's been hurting the stock most. With that said, they put in a nice low around that $8 level. If they have any positive news, and we're going World Cup, I mean, you can bet a ton of ways on the World Cup. I mean, just think about this. Halftime, there's 22 players on the pitch. There's who's going to get subbed in or not get subbed in. There is so many ways to gamble.
Unders, overs on corners, yellow cards, red cards.
Well, this is the Super Bowl coming, and it's being played for what, 2 or 3 weeks? 4
weeks, I think. Yeah.
So you get the 4 weeks of the Super Bowl running with all its little nuances, and people just clicking away on their phone betting. And they have a great platform. You don't see like Caesars draft. I mean, Caesars had the big ads. They did it. That's right. They had big ads with big popular actors. Now I remember them. You can see Kevin Hart is kind of melted in my head. I can't remember anything else, it seems. But anyway,
campaign's working.
It's working. It is. I haven't used DraftKings, so anyway, I will just say this: DraftKings promotion is the biggest problem with them. People need to see the translation of promotion to revenue to earnings. If they can demonstrate that, this bottom off of $10 here might put the stock back up into the 40s eventually. They really have a leadership position at the bottom, and if they don't screw it up like Robinhood did with their base, they could get moving. They're in the bigger, heavier spending areas, and I think that will help the stock.
All right, and then as we always do, we wrap up the show with like it, love it, leave it. So here we go. Are you ready, Brendan? We've got 6 names through today, all earnings related.
Let's roll.
All right. On Wednesday, Broadridge Financial Solutions are reporting.
I just realized I probably should have did boo for leave it and had a Halloween theme of this, but I won't.
Sure, you can go with that.
Boo. No. Leave it. Broadridge seems like it's in a downtrend. It stalled when it bounced randomly last week. I know it bounced off that red line at 200-day, but on the weekly it didn't. I would leave it. I think it's probably going to eventually move lower.
Okay, and then on Wednesday also we have Humana.
It's not too often that you find momentum stocks in a downtrending bear market. The Humana and UNH have defied the odds. This stock is screaming to the upside. I think momentum players are just finding that there's not a lot of momentum and they're finding it. So I like it. If they miss, it's a big risk, but I like it. It broke through 540. I think 580 is probably next. Okay,
and then Thursday, Petrobras, and they're also dealing with the elections results in Brazil of Lula returning as their leader.
Yeah, this is a tough one. It's hard to be negative on energy stocks given the environment, but I would leave it. They haven't really kind of figured out how to pump out oil in Brazil either as much as they should be. It reversed on 15, which was a high-level target. It reversed on 15 on the election, I guess. And it's moving lower. Probably 13 is next, which is not that far from here. Breaks there, it's probably going 11. So we'll leave it.
Okay, Thursday, we've spoken about these cruise lines just recently, but Royal Caribbean.
rocking and rolling. I hate to say it because you see those two wicks right there on the left of that breakout candle. This is ripe for reversal. However, I like it. As I say that, it's momentum. You got to play momentum with these. So heading into earnings, I'll just say, unless these things surprise, and usually they don't, the momentum continues. So I like it. It looks like it wants to extend beyond 52 upwards of near 60. The airlines are doing really well right now. Travel in general seems to be doing well because it's all about capacity, higher prices, better revenues.
Okay. And then Duke Energy is reporting Friday as well. Okay.
So I think we left this one last time at 96, not too long ago. Now we like it because it had really nice turn off of 86. So I'd like it. It looks like it has upside. It's an energy name going into a volatile energy period. I think they're big into ESG as well, but that doesn't really matter. The momentum looks higher.
Okay. And then being Halloween, you would think that Hershey would report today, but no, they're reporting on Friday. What do you think on Hershey?
What a chart. I mean, it's another, like, I think we talked about General Mills, and I tried to jump in front of the General Mills trade and it just exploded higher. What's better than demand for a product in a very stressful time where you can continue to raise the price? I mean, candy bars, I don't know, they just continue to climb in price. Well, Hershey's in the perfect business. It's Halloween year round for them right now. I mean, I like the stock. It's just GIS proved that if you have pricing power and demand, you're going higher, and that's what's going on with Hershey. Their candy's everywhere. You pay a lot for it, and people still buy it. And it's Halloween. It's like Christmas year round. When you have, for them, it's Halloween year round.
All right, Brendan. Listen, you have a great Halloween. Thank you so much for your time today. And before we go, obviously giving out candy and so forth, what's your favorite candy for tonight?
I'm a peanut butter cup fan. Fast breaks. I like the fast break and the peanut butter cups.
I'm more of a Milky Way guy myself. But
I like those.
have a great evening. And for everyone else out there, good luck investing.
Happy Halloween.